Good morning, everyone. Sorry, wow, force a habit there. Good afternoon, everyone. Jeez. Good afternoon. Welcome. Hopefully you all had a fantastic trading morning so far, and you're ready to rock and roll into the afternoon. Remember, today is FOMC day. Could be a little bit of an interesting one. We've got FOMC in about an hour. But before we get into that, welcome to the daily afternoon market recap offering video. We also look for some S&P scalps along the way and see what's going on across the markets. Over the next 30 to 60 minutes or so, we're going to go over and cover what took place today and the trade setups that presented themselves today per the rules outlined in the Academy and the VIP trade plans. Now, I talk about every setup that presented itself today, and I am incredibly harsh on the patterns. But remember, not all patterns and setups are created equal. The ones that I'm going to cover here don't use common sense at all. Like I said, I'm really tough on them. Going long in a massive downtrend, that's valid, fine, sure. Shorting in the bottom of a range, sure. You get the picture. I do this to ensure total fairness in the patterns and the setup reviews so that there's no cherry picking. Don't forget, before we kick this off, smash the like button below the video there and let the YouTube algorithms know what's up. Don't forget to also subscribe to the channel so you don't miss the next video launch that we do every day or the next time we go live. And that way you're all up to date on that side of things. If you want to hang out with me and the rest of the VIPs for the entire US morning session instead of just the afternoon here, you can register for a 1-week trial to our private VIP live trade room, and you can see how we trade the markets in real time while they're moving during the New York Stock Exchange Open. Plus, when you register for a trial, you also get the 24-page guide on risk-reward, along with the access to schedule a 30-minute call with me to discuss any questions you have about joining as a member or anything else. And the best part is, it's totally free, no credit cards or anything like that needed to register. So make sure to get on the calendar soon before the holidays, otherwise it's it might be a couple weeks. If you have any questions about what we offer, what we have available for you, or anything in between, we do a Q&A time after the chart, so we'll definitely get that covered for you. So with all that out of the way, let's take a look at what happened today on our old buddy, the NASDAQ. I don't know if I want to call it my buddy today. It wasn't very friendly today. Man alive. If we look at the overall move here, first off, looking at the patterns for the day, we've got an overall pattern across the board of a -1R, a -1R, and a 2R. So, I mean, it's pretty straightforward. Hang on one sec. There we go. So, I mean, as far as the day is concerned, it was basically flat, break even, not really a whole lot going on. That said, within all of this back and forth movement, there was a whole ton of stuff going on. So let's look into this a little bit further here. First off, the initial drive to the downside right in here, and you'll see as soon as I turn on the entries what's going on. We've got a continuation phase to the downside that the sellers were looking for more repetition into. You'll notice that I did have some sell orders there, but you'll also notice along the way, I was building into a long, primarily because before all of that happened, we had this back and forth wedge that I was looking for a continuation break on. Had beautiful sideways action, nice little dip buy, looked for the continuation, looked for the dip, couldn't get it, and just started sliding and sliding and sliding. So instead of just, of course, infinite money hacks, I don't have that. I'm not Goldman. So as far as that's concerned, you got to eat some of the losses along the way and keep the average in check. So there was a lot of building in, building out, building in, building out, drawing my average down over and over and over again. I had to eat a lot of losses along the way until eventually they finally had their turn back to the upside where we exited the final portions. But it was a rough ride the whole way across. So inside of here, there was a short opportunity. Yes, it was a loss. And for me, I didn't even take it. I had to take profit targets, quote unquote, for my underwater longs along the way there to see if I could draw my average down. They did offer up a relatively nice continuation and then just fell flat on their face. More likely, it was just these earlier buyers who were accumulating, getting out of break even. But with that rotation back down, it went kind of a bit sideways, didn't really do much head and shoulders-esque, and then started trying to rotate back towards the highs. Obviously, this was after that monstrous press to the downside, so going long in that kind of condition, not the best of choices, but as far as a pattern is concerned, it was a loss. Didn't work. And to be fair, I was building in long all morning. Not that I wanted to be after it ripped my face off. We'll look at the trader's math in a little bit just so we can cover that too. But as far as the overall back and forth is concerned, it started building a head and shoulders and had a nice rotation up. I didn't have any entries around that point because, well, frankly, it just wasn't worth it. And I was still in the long looking for profit targets. You'll notice I did take some profit targets there. Once the market started rotating back up again, the final objectives reached, and we saw the market just get absolutely slaughtered to the downside. Huge rotation, big old blast off on the top, and again, likely that's because of all of those previous underwater not being underwater anymore and taking huge targets and exiting everything. And then the market dumps all the way back to the downside. Sellers had the initial attempt on this breakout of support with a retest continuation, and then a follow-up one a little bit later. The way that this one played ball was incredibly vindictive. I tried getting in for a quick little scalp, didn't get an additional fill, tried getting out of the other one, got kind of a bad fill. When it popped up, tried getting another one that I didn't get a fill on, and then popped down. It was here. I hit buy bid, and I got filled like 3 points away. So it was just a mess inside of there. In the end of things, it did end up working out. If it was just like limit in, limit out kind of thing, sure. It worked out perfectly, but don't let it trick you. It was not very friendly inside of there. Now, once we're rotating down, you'll see this gigantic, thick green line. If we zoom out to the... hang on a second. Let me get my recording out of the way. If we zoom out to the larger perspective on the 60-minute chart, we've got this zone of interest that is testing some massive bear objectives. This is a huge L2 continuation, major target area, and that's what that big, thick green line is. That's their target area right there. So keep that in mind when we're keeping that zone bouncing around. We are underneath, right, the short's profit target area. This is all icing on the cake. Now we're back to break even. They're defending it again, right? So what are we seeing here? We're kind of seeing them saying, okay, well, they're worth pushing into to try to see if they can get it to go, but let's go back to the previous swing. Chances are they'll use that one. And if they're looking at scalp targets and moves down, and they're entering in off of that 2 1/4, are we seeing proof? You know what we always ask. Are we seeing proof that the market is bouncing off of the target areas? Yes, 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 and yes. So realistically, if we're looking at this, the shorts did re-up into the move, and then they've also pieced out of a couple of those contracts too. Remember, they've probably been short since way the heck up there while I was getting my face caved in. So that's kind of the move on the way down. Well, this is that final rally bounce. A lot of those earlier longs who didn't have a chance to get out of this one, and then it cycles all the way back down again. It's kind of their last ditch. But, big caveat to that. If the shorts fail to hold here, and then they start going underwater, they're not going to want to hang out very long, especially not after a huge run to the downside like this. So this zone is very touch and go, I think is the best way to put it. As far as the upward momentum is concerned, we do have a little bit of bullish momentum up, trying to carry this on higher with an L3. So if this can break another high aggressively enough, we may have an L1 continuation phase to play with. And I've also got to delete this before it drives me crazy. Oh my god, where did it draw from? There it is. Alright. Then as far as the S&P is concerned, hang on one sec. New window. Holy crap. Hi, S&P. Jeez. Let me get the S&P all loaded up real quick. Alright. There we go. So as far as the S&P is concerned, we've got, I mean, realistically, what are they actually getting done? I mean, we kind of slid off that. First off, there was like no gap at all on the open. Hey, Bram, how's it going? Another negative 1% day. It's crazy, isn't it? We've got a lot of really lackluster movement out of the gates, and then it just collapsed on itself through the base. And we've got this really nice 1, 2, 3 rotation lower, and now we've got a higher low. So, I mean, there's definitely an argument to be made that the bulls are trying to take this and sweep this back to the upside. And if we look at the top to bottom, if we go up to down, and we see the POC hovering at around the 1350s, that's going to be their zone of interest. So we have to ask ourselves, right, are they actually achieving their objectives? And so far, they have not. They're getting real close, though. It might actually happen in the next couple seconds here. Oof, in the equity, yeah, I feel you. Man, this whole morning, I got stuck in a long. I don't know if you were there this morning or not. I got buried in a long and had to work my way out the whole morning. Finally got the stupid thing to rotate back up again, but ugh. It happens. Welcome to trading, right? It's not always hunky-dory, cookies and cream. As far as the S&P versus the MES, there will be some differences between the two, definitely. I mean, especially if you're looking at the volume, right? If you load a market analyzer with the MES and the ES, we've got the ES volume, which is double. Now, if you're familiar with the NASDAQ, that's actually kind of backward from what we're used to seeing, because the micro NASDAQ trades a ludicrous amount of volume when compared to the regular NASDAQ. It's flip-flopped. So the S&P versus the micro S&P, it's definitely nice as far as the $1.25 a tick versus the $5 a tick and all that. But from a value perspective, if you're trying to load a tick chart, don't go the normal way you would with a NASDAQ. It's not going to work. You got to flip it. So with the S&P, you know, as far as its overall movement, there will be some differences for sure, but not as many differences as you would notice on something like the NASDAQ versus the micro NASDAQ.
Program. Some analysts believe that a speedier reduction will increase stock market volatility. If they follow the route, we believe it will leave an impact on asset values. Our guess is that growth will slow at a time when it is already slowing.
Remember, we've got FOMC later at 2
that are bear case
Eastern, 2 Eastern.
Further from Morgan Stanley, saying that if the Fed would be tapering its bond buying program twice as quickly as it did in 2014, and it took the central bank 10 months to wind down its operation. Furthermore, when the Fed last tapered, economic growth was increasing, whereas it is now expected to decelerate. Previous FOMC comments were made. So
S&P pulling down just a little bit. They've got an unfilled gap resting underneath this most recent low. Whoop, hang on. That's going to be right there at 14. And it's interesting because here's one of those times where they actually are the same. On the S&P, the gap from close to open of the candle versus the micro S&P, they both have the same gap. So you do actually see the similarities on the S&P are going to be a lot more frequent than dissimilarities versus like the micro NASDAQ, totally different.
Are likely reasonable each month, but they were willing to adapt if necessary, and state that similar decreases in buying speed are likely appropriate each month, but are still willing to adapt.
As far as the NASDAQ is concerned, we had a rotation off of an L3, and then they're trying to hold the L1s.
This summer hampered the recovery of industries.
Right back into the shorts break even is what makes this so challenging. The S&P missed my entry by a tick.
Economic activity.
Yeah, fair enough. All right. That's not incredibly frustrating at all.
Transitory, and supply and demand imbalances caused by the pandemic.
Oh Lord, there they said it again. Transitory.
Price rises in several sectors.
It's been the buzzword lately.
Also a reminder, Bank of Canada's Governor Macklem is due to be speaking shortly as well. Of course, just giving a speech after his press conference.
All right, well, the buyers did demonstrate the support off the L1s on the the NASDAQ, and the S&P missed the dip buy on that gap fill by a tick. Let's see if they can follow through with a bit more here and what they want to do. If we zoom out to the bigger perspective off of the lows, we do have the negative half DP, which is maintaining its support. That's also the previous major swings up here. So there's a lot of definitive zones as to why that would be a nice spot. If that doesn't hold, though, there's not much left. You got the big volume node at 45.85 or so. Yeesh. What is this candle on the S&P? Yikes. See what the market wants to do here. It's kind of chopping around the break-even point of earlier shorts. This is the challenge zone because now the shorts who are defending their entries at 802 quarter are pushing directly into longs who are trying to hold the L1. Let's see who's stronger. We might still get this little dippy do down here.
To remind us with Powell, he did recently say, well, on December 1st, that we need to move away from the term transitory.
Didn't he just say it?
That was during his hearing in the Senate committee.
Got to move away from that. Yeah, but this one's transitory. This one's different.
Ukraine's president
Come on, man.
The Ukraine is ready for any format of talks with Russia. Also, going back to what Powell has said, 85 counterparties take $1.621 trillion at Fed reverse repo operations. That's 85 counterparties.
I'm going to offset on this and dip down to 13. They may just bounce and leave me out of this one. But the way that this is starting to kind of transition, it's relatively transitory up here. It looks like they may try to pressure down just enough to try to get these earlier shorts out. I like the offset just a little bit more. That does, of course, run the higher risk that it doesn't actually get filled. Story of my life with the S&P, but there it is. That POC is a big help right now.
So the Fed reverse repo facility usage jumps to a record $1.62 trillion.
I'm curious if we go all the way across, though. POC hasn't moved a lot, but it is a little bit lower. They're hitting the L3. I'm going to skip this long. This is a little bit suspicious. As my son would say, this is sus. So something's up with this. I don't like the way this looks. I need a bit more info.
Michael says significant amount of slack, saying that we have a significant amount of slack without.
What?
Michael's saying that significant amount of slack we did have in the economy is substantially diminished.
Gotcha. Bulls going back up to that 15,802. I'm kind of curious to see how they play ball in that, but the S&P is still hanging out. Got a little micro double bottom down there. NASDAQ breaking above that previous short zone of interest. The S&P, I don't know. Another rejection from the break-even shorts at 802 quarter. Trying to push back down off of it. The question is, how much on the offensive are they actually going to put here? Oh yeah, no, the whole morning. Yep. The whole thing. It wasn't very friendly. But maintained. It's all good. Bulls snapping off the L1. The closer we get to 2 o'clock, the closer we get to FOMC, the closer we get to volatility. Sound like Dr. Seuss now. Let's see what the shorts have. Looks like the longs are trying to sweep it back up on the NASDAQ for a continuation phase back higher. I like this move for a quick little pop if they can get it. Yeah, like that. Nice. Quick little pop, just like that. Thanks, NASDAQ. I appreciate you. Over on the S&P, oh man, this thing's gapping all over the place. This is a mess. Closed to open gap. Let's see. Closed to open gap. 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 Another one. Another one. And another one. When we have a situation like that, it typically means one of two things. We're either dealing with an incredibly volatile market, or we're dealing with an incredibly low volume or illiquid market. Hang on one sec. All of those longs who didn't take their profit, I think there's an opportunity for a potential short here. I didn't get a fill, though. To see them flush this back to the downside with all those longs that tried to grab it. For a continuation pulse back to the downside. Yep. We've got all those longs that bought above that last bull bar, and they just got dumpstered. I think those longs are severely underwater and looking for an exit. Possible stop run underneath the low. Only a few ticks left on the candle.
Macklin says that the Bank of Canada, that its focus is now when to remove...
Not getting the move that I wanted. I'll take it off at break even. No thanks. Tried to get the continuation cycle, but they didn't do it. So anyway, through all of that this morning, building in, building out, getting steamrolled by the NASDAQ after it trapped me on that wedge, one of the things that we always like taking a look at, how do the numbers look, right? What does the math look like? How's the trader's math? Is it positive? Is it negative? Today it's negative because I'm down on the day, but when it is negative, how negative is it, right? Is it way out of whack, suggesting that we were doing something stupid and trading improperly? Or is it negative in the norm, right? So we've got to ask ourselves those questions. Just looking at today, dollars and cents aside, those don't matter as long as you're trading properly. That follows along with it. What we want to see here, on a normal day, my average as far as traders math is between like 600 to 800. Lately, the last few days have been over a positive 1,000. It's been a couple good few days. But if we're looking at today, obviously, not a very good day. 66 trades, 45.45 were losers, or winners, and the rest were losers. That means that 54.55 times the average loss of 54, and we have the average win, which is the exact same size, minus the loss math, gives us a negative 491.4 on the math. Now, from a negative or a positive perspective, yeah, it's negative. Negative days happen. That's called trading. But what we need to see here is it still in bounds, right? Or is it like negative 4,000 because I did something stupid? No, it's not, right? My normal up day is 6 to 800. This is negative 490, negative 500 basically. It's right around the norm, a little under, which on the losing side, I'd rather it be smaller anyway. So even though it was a difficult day, it didn't work out very well, the math is still showing that we approached it properly. And further, beyond that, we can also see that when offered the opportunity for the market to run, we allowed it to run, right? 260 versus 135 is almost twice the size. So the 2-to-1s and everything were still running, it just wasn't enough to overcome that morning beatdown. That's how it works sometimes, right? But the important part is ensuring that our math is solid. Then we know we're good. Today wasn't as easy, but if we factor it into the rest of the week,
Biden is to toughen auto emissions.
Then we've got 168 total trades. Whoops, I need the dates on there. Really? try so hard to not focus on the dollars and cents, but sometimes it just wants to pop up on there. So for the week, obviously a lot of trades, and 66 of them came from today, but 168 total trades. 60.12 minus the 100 is 39.88 on the loss. Average loser is 41, and the 60.12 times the average winner is the difference. 1635.08 shows that as far as the math perspective, halfway through the week is at a positive 469. So just because today was negative, as long as we were following our rules, the negatives from today are nowhere near going to overshadow the positives earlier in the week. That's the goal, right? But again, just so you can see, it's important. Even if it's a negative day and you don't want to look at it, you learn the most from bad days, by the way. It's important to ensure that your math is still correct. Because if it's not, then something happened, and you have to approach it with some caution. Because if something happened and your math is way out of whack, that's the kind of stuff that can blow your account out. That's why it's so important to track. We've got the market still hovering off this L1. I'm glad I exited the short. Obviously, we were picking up on some weakness there. It wasn't following through, but what happened? It just kind of stalled out. Now we're dealing with a bit of back and forth support. S&P is trying to find that little gap fill. There's a lot of resistance up here and some pretty strong bear bars. And notice, this is creating some pretty stiff resistance here. I don't know that I want to be buying directly into that. That seems like kind of an unnecessary challenge. See what they want to do here.
Magnum says significant degree of slack in the labour market has been absorbed.
Here it's just kind of hovering, not doing too terribly much. Bulls are really trying to creep this thing back to the upside. The bears are pressuring, but the bulls are just saying no thanks. Look at all the support down here. Triple bottom now on the last few wicks. Crazy amount of support coming in. Here we sit, S&P trying to creep its way back up. Looking at the larger perspective on the S&P, you know, again, from the way that this is moving, at least from top to bottom, the assumption is that we have the POC landed at 46.1350 with, geez, a ginormous amount of volume that came in down at the lows. This is one of two things, right? This is either the shorts taking profit, or it's possibly longs who just doubled down to try to get their average lower. So we can kind of focus it on both sides. But if it's the short side, it's likely from there. And, you know, again, we have to ask ourselves, are we seeing supportive? Yes, 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 right? Fairly obvious that the shorts have been kind of satisfied on that down move. How about the bulls? Not yet. Probably what they're trying to reach out for. And given that their break even is only a few ticks underneath the low, it's really not that far away. NASDAQ pulling back a little bit further. Going in towards the 1:30 time frame as well. So if you have any questions or anything, feel free to get those in. We'll get those covered for you. Sellers slapping this thing right back down again. Now, technically, the S&P is a bear engulfing candle. That's fun. Okay. Only have about 40 seconds left on it, too. Please don't close as a doji. Please, just don't do that and we'll be okay.
It's getting closer to the moment when we will move away from exceptional forward guidance.
Now, remember, this is also the break-even point of those earlier shorts on the NASDAQ at 15,802. So now that they're starting to transition a little bit negative, we've got to kind of look and see, well, if they're going negative, where was their target? Right? This obviously hits some one-to-ones, but what can we span this out? We want the worst-off scalpers. Right? It looks like those were the worst-off scalpers at that swing high there. So as far as the continuation phase back down goes, the support zone is going to be hovering right about there. And you know, the one thing my eye immediately gets drawn to is this little swing low right here, which probably has a metric ton of stops underneath it. I bet Goldman would like to eat those up if they're looking for a long. We do have a head and shoulders pattern. It's a lopsided head and shoulders. I don't like these kind where you've got this kind of backward neckline, which is angled up. That makes it a little bit more not so fun and a lot less likely to actually succeed beyond anything more than like 50%. So if they do end up getting the breakout, chances are they're only going to be able to make it up to, you know, like maybe 15,840, which is still a good rally, but I want to see if the sellers take this opportunity to rotate back up. And along with that, where are the swing traders in this equation? Right, the swing traders in this equation, that's going to be another one. That's going to be the hot spot, right there at the top down to the low. That's where all of the interest is. S&P is still a mess. That hasn't changed. Great. We've got about 30 minutes until we start going into FOMC. Well, not we. I'm not going to be trading into FOMC. No thanks. That's a hard pass. All right. Bulls are still continuing to the upside. The buyers finally break the highs on the S&P. They missed my dip entry that I wanted by a tick. It's incredibly frustrating. But I'm sure I'm not alone on that, because if we look at that POC transition, I would guarantee that there are a lot of people that got missed on that one. Some of them may even be shorts who are underwater hoping to get out. That means that we've got a potential for a squeeze. I know it's way up here, but this has the potential to kind of spark and get going. NASDAQ buy zone is a little bit of a ways below. It's got some distance down there. Now, like we were talking about this morning with you YouTube members in the morning brief, we do, just as a side note, we do a morning brief every morning on YouTube. If you click the join button below, it'll give you more info on that. But we do a morning brief that we were talking about on the 60-minute. Let me switch over here on how this could potentially expand out to a megaphone. right? And we've got the top of the megaphone here, and I mean, the megaphone could be as extreme as this, but at the very least, even down here, and that's about a 1, 2, 3 extension. So that's a big spot. You know, if we're looking for a rotation down inside corrective nature, we've got wave 1, 2, big drive down into wave 3 where it is now. Wave 2 was kind of disgusting, so wave 4 does not have to be very long-winded, which means that it could look something like this, just straight up, straight back down again. And it would be conditionally good for a lot of the bulls because all the bulls probably got stuck. They're probably still stuck and they haven't gotten out yet. So they need a little bit of a pulse to get out if they didn't on this last one. So that dive down, I mean, 15,320s would be the spot, but if we look left, man, there's not much left. If they can't hold there, you've got the top of wave 1, and that's at 15,000, obviously gigantic round number. But at the same time, you know, we'll have to see what it wants to do. Now, as far as the S&P is concerned, the S&P's got a little bit more of a developed cycle, but same thing. That low point would be down at around like 45.83 quarter-ish. Bitcoin still under pressure. S&P gaining some momentum to the upside and trying to break above the highs. We can also see the very similar kind of wedge pennant formation on the NASDAQ.
And the news conference with Bank of Canada's Macklem has now ended.
All this back and forth. These bulls do not want this to pull back. Buyers who are buying for the breakout, they're buying up here with really small stops. They're not wanting this to pull back. If it dips, they're out. This is the squeeze, and it's kind of got to hit the gas pedal sooner than later. That bear bar on the top does not feel good. Oof. Maybe this is where they want to try to pull back from, I suppose. Okay, there we go. They still didn't dip underneath the previous candle, so you can see them trying to hold on to that strength and really pin it to the top. They're not breaking out, though, either. Doesn't feel like they triggered the stops. The problem for the NASDAQ is the stops are going to be up here. They've got a long way to go. They're going to have to hammer the gas pedal. Strong bull bar might be all it takes. Trying to break the neckline. Upside objective based on the neckline and the angle of the head and shoulders would suggest that we should see resistance if they do continue up. Right inside here. Previous zone would be up to the swing high. That's a kind of a big spot, I guess, but thank you. There we go. We'll go kind of Christmassy colors. Possible whip sort of trap off on the top, and it's starting to get a little bit more difficult. Might be more beneficial just to wait for the market to come to us. And now, again, we've got, like, what, 22 minutes until FOMC? It's getting more and more dangerous the closer we get. So let's go into training time. We'll see if there's any other opportunities that set up, but let's get some questions taken care of and see what this entails, how it wants to play ball. A lot of those longs are getting whipped out right now. See if this starts the cascade down into that support. 74 is going to be the zone of interest. We'll see what they want to do. Oh man, I'm gonna run out of properties in Upland at this rate. I hardly have any of my Bronx properties left. They're all gone. I aggro price too much. I don't have anything left. Bears try to pressure off the top. We've got, oh man, some nasty momentum off the highs there. Let's see what they want to do, but it looks like they're running into some trouble off in the highs. The bull, I mean, like we said, the bulls really tried to get things going up in the 816s, and chances are, well, there's been enough back and forth up here where the POC might not be there. Yeah, but we can certainly see the volume was. So now if we look at where that landed, that's there, the POC is here, so it's only about half. So assume if they had 100 contracts short from here, they added another 50. That's not going to do much for their average. But if it can come back down to this break-even point, that does mean that they can start positioning out. That break-even point, unfortunately for me, is above my buy zone. But 5,790s is at least a zone of interest. If they're putting their stops underneath the lows, those would be just scalpers. That's it. S&P's got a gnarly looking bear bar off the top. Yikes. On the S&P, the potential for it to flush off of 16 quarters. I don't know if I'm actually going to be able to get a fill, but there we go. 16 quarters, looking for the push down into the 15 quarters. Testing the target and out. Nice. Who said we weren't going to get a trade, huh? Nope. A point a day, baby. Last second, but hey, that's a really nice pattern off the top there. They failed to break out of the highs. We got there in the end. Very nice little opportunity there. Fast. But sellers in a great spot to try to rotate that move back down again. And I think that's about the perfect way to end that. Talk about the skin of your teeth, huh? Like I said, we've got about 20 minutes or 14, 13 minutes until FOMC. Be very careful going into the afternoon. FOMC can sometimes do nothing at all. And other times it'll rip your face off, and you don't want that situation. So a lot of times, you're just better off staying on the safer side, right? Again, if you have no idea what it is that you're looking at, or maybe you're new to trading and this is all totally new and you're trying to figure out what the heck is going on and what I'm talking about, FOMC, what? Don't forget to swing over to the main page on SSFTG. We've got the Day Trading Academy, which has 19 plus hours of video course material, and that will definitely get you pointed in the right direction to get things going. We also have the trial and all that fun stuff, which you will also receive. Usually takes up to like an hour or so with the trial, but when you register for the trial, you get a 24-page guide on our risk reward, and that also gives you a lot of insight as to how we look at the markets in general. So very, very useful resources to take a look at if you're trying to figure out what's happening. Of course, if you are looking for a way to join me during the New York Stock Exchange Open, we operate the live trade room for VIPs from 9 a.m. to 12 noon, and that is included in all VIP packages. It's just a one-time cost. There's no monthly fees or any of that other garbage. So, of course, going into the holidays, I understand that kids are incredibly expensive, things are incredibly expensive, and it seems like the smaller things get, the more expensive they get. We do also have very budget-friendly approaches available, as little as $84 a month for 12 months for VIP registration. That way you can save yourself a little bit of hassle and maybe be able to pick up an upgraded iPad this Christmas. If you need any info, obviously, I'm here. You can always shoot me an email, jhb@ssftg.com. If you register for a trial, you also get a 30-minute call that you can sign up for. So that's another way to get those questions answered. Market's just kind of hovering. The S&P looks like they gave the scalp, and that was it. No mas. Straight in, straight out. All right, good enough. Well, on that note, I'm not seeing any other questions coming in either, so that's totally fine. We'll wrap it up into the afternoon, and we'll go from there. See if we can gather any more Upland properties. I'm running out of them. Jeez. I don't know if you guys were watching the rest of the Bronx launch today. It was a bit insane. Really smooth, though. It went really well, especially compared to the rest of them. Ugh. Anyway, if I miss any questions, you can always shoot me an email or get a hold of me one way or another. I'm here, and we'll go from there. But that's going to do it. Got that one scalp. Hey, on the S&P. We also had a nice little one on the NASDAQ, and then one that went nowhere. Worth a shot. Today's been kind of a tough day, all things considered, and well, the trader's math tells us that we were at least in alignment even with a difficult day, which is all we can really care about. As long as we're following the plan, whether it's an up or down day, the dollars and cents and all that follow with following the rules. That's how it works. If I miss any questions, like I said, you know where to get a hold of me. Otherwise, though, enjoy the rest of your day. I hope you had a phenomenal day this morning, and we will see you all back tomorrow afternoon at 1300 Eastern. Or, for you VIPs and YouTube members, we'll see you back tomorrow morning at 9 o'clock a.m. All right? Have a good one. We'll talk to y'all later. Thanks.